Today we're doing some Chainlink technical analysis. So first off, this is the BTC USD dollar chart, and just to explain essentially these basic patterns that I had drawn out, all of these were drawn out before they actually occurred, and all of these kind of went as planned. So right here you have a descending triangle where the top line is falling, bottom line is flat, so that's descending triangle. This is a bit bullish pattern. Then you have an ascending wedge, so it's basically just this pattern. It was forming in this channel, or you could call it an ascending channel. This is a bearish pattern. It did break down right here, so this is where you trade the breakout. Then we started forming somewhat of a symmetrical triangle. You can kind of draw this a couple of different ways. And then we entered another rising wedge out of this symmetrical triangle, broke down out of this again, formed this W. This was a fake out. Now we're kind of forming somewhat of a, you could call this a bearish, like a descending wedge right there, or a bull flag. But you can draw this in many ways. Those are just the basic patterns we'll be using. And then the Bollinger Bands and the EMA ribbon. So that's for BTC just as an example, but let's move into Chainlink. So Link, this is a coin that I got into very, very early, luckily. And, this is really important. Let's do Chainlink USD. If you're trading this to be using, and I like to personally use Femex or Bybit, so we can actually use Link USD Femex, because ideally here what you're finding is the breakout trades, and we'll go to the 4-hour chart to start it off and really focus on the long-term perspective. So we can remove the EMA ribbon, remove the Bollinger Bands, and just have this nice little naked chart here. We can even remove volume for a second. This is what I like to do. By the way, I'm using TradingView for this. I will have a link down below for TradingView, but with Chainlink, you can kind of, you tell me, guess what this is. Let me know in the comments. But we can kind of zoom out and go, okay, right now, I personally would say we are in a symmetrical triangle. So I hope you could see it before I'm going to draw this out. But you can kind of draw this a couple different ways, or you could say you could draw it like this. Again, technical analysis is just one part of the whole pie. So draw it like this, and here, and you could call it an ascending triangle, which is technically bearish, like this. You could do something like this. There we go. Somewhere along those lines. And again, what's important to understand with TA is, and I just really want to draw this out for anyone who hasn't watched any of my other technical analysis videos, but what's very important is each of these lines are really a range. So first of all, you'd want to have key support and resistance drawn out if you're trading this macro. If you're just day trading this, I always have it linked down below. There's a video called How to Make $100, or I think it's $200 a day leverage trading. It really just depends on the capital you're using and the leverage, plus your technical analysis skills. But I lay out a very basic strategy using just the Bollinger Bands and volume. It's very, very basic, and it works pretty much every time, so go check that out. But as I was saying, so these lines are really just ranges. So right here, if we go to, if we want to draw out a box, here we go, a rectangle. So really what this looks like, it's not an exact line, it's really a range. You can see here, same with support and resistance. So for example, if we go all the way out to, let's say, the weekly chart, and we want to draw out support and resistance, you can draw this out a couple of different ways. There's a couple of different ways of doing this. So you could say, here, let's zoom in, zoom out. Yeah, I was very fortunate to get into Chainlink. I think it was under $1 when I got in, pretty crazy. But you can see this kind of crazy move up. We kind of form this little cup and handle here, and now we're in these very high ranges. But again, if we want to draw out support and resistance, this doesn't look that big in the grand scheme of things. But if we zoom all the way in and we go, okay, what are our current support and resistance levels, just at a very, very basic level, and then you can go to the day time frame. I always recommend doing this before trading anything, but this is kind of our bottom, right? So our bottom, I would say, is right around this level, because we touched, broke up, touched again, we wicked down, popped up from here, and then we have another nice little range right here. And again, these are not, you can draw them as lines or ranges, but the key thing is if you're drawing them as lines, you have to remember that it's really a range, because technical analysis is really just a tool in the tool belt to hopefully analyze the charts, analyze past movements, and then potentially predict where it's going down the road. So now we can move to the 1-day time frame, and you can see it even a little bit better. And I've done a fundamental analysis on Chainlink. It's my favorite oracle. It's leaving the space. There's other ones like API3 and Umbrella Network, but this definitely is leaving the space in oracles, providing data feeds for decentralized finance. So, and go check that out if you don't understand this project fundamentally, because if you're gonna, it just depends what you're doing. Like for as I was saying, you can be swing trading this. If you're swing trading it, you kind of want to have a longer term perspective. You can be holding it, or you could be day trading it. So day trading it would be, that video where I talk about how to make $200 a day leverage trading, and with those skills, it doesn't. Fundamentals are kind of important, just so you know what you're trading, but then you're just looking kind of for short-term gains. And this is one other level, I would say. So we kind of hit up here. We got rejected at this resistance level. We dumped down. We hit here. We got rejected at it again. So you could like pull this down a little bit more. Dip bounced here on this key support level, formed a bit of a W, bounced again, bounced again, bounced again, popped up, got rejected when we hit this level, broke up, broke past it, touched it again, retest, and ever since we've kind of been forming up in this level. So that's what I was just trying to explain. How you really want to look at lines in technical analysis. They're really a range, not an exact like price level. It's really a range. So again, when you're looking at these lines in this triangle, think of them like a box. But once you kind of get more advanced, you don't necessarily have to draw out the boxes, but this is good to start out. So you can see in this symmetrical triangle, how you can tell we're doing this is we're essentially forming higher lows, and the highs are staying at the same point. You could draw it, if you wanted to, a bit more like a symmetrical triangle. It just depends how you're looking at it. So you could draw it a bit more like that, but I kind of prefer this level because we are forming. It just really depends how you look at it and your strategy. This is why the main thing is doing this, repeating it, and forming your own strategy of technical analysis, doing what works best for you. So you can kind of see we're basically consolidating in this range here. Now, what was this pattern right here? Well, I think you can see from how I drew out those Bitcoin charts earlier, this is a rising channel or rising wedge. So you could draw it like this, about like that, and here, say like this. And when we broke out of this, since this is a bearish pattern, you see how you can even pull it down a little bit more like this. There we go. Okay, that's about perfect. So essentially you're seeing we're basically just bouncing around in this channel. It's like if it breaks out of this channel, most likely you can do a trade here. This was a nice W pattern you could have traded. So this was a kind of like inverse head and shoulders as well, you could call it. So you see a peak here, we touch down, popped, there's the head, popped down, the next shoulder, we broke out from there. But this is like if you draw out these patterns, you can kind of trade this. If you understand how it's forming in here, you can short up here, long down here, short up here, short up here, short up here, long here potentially. But yeah, so that's kind of the overview of the Chainlink charts here. We can even go back a little bit more and draw out one more pattern, and then we'll get into the closer time frames if you're looking to trade this currently. But let's see. So this was in August 17th. Ever since this happened, we were kind of in this. There's obviously been little patterns in here that have formed, but since we're on the 4-hour charts, we can kind of draw this out. Right, let's see. So we could do here to here, I would say, right about there. You could say this is technically, this is technically like a triangle that kind of faked out a little bit there. But again, there's many different ways to draw this, and it all depends on the time frames. I like to look beginning, if you're just starting, go zoom way out, draw out the key support and resistance levels, because right here is a key support and resistance level on the shorter time frames, but it also depends on what strategy you're using. So if you want to see more on the different strategies as far as trading goes with technical analysis, let me know in the description or in the comments. But let's zoom into the 1 hour. Okay. So you can see how we kind of form this M here. This could have been a potential breakdown trade, but right now we're in this very interesting pattern where we're right on the edge of this ascending triangle. And since this is a bullish pattern, this would have been a nice long position right here. So personally, if we zoom in a bit more, you can also pull out some of the bands now, some of the moving averages. So we can pull out the Bollinger Bands and the EMA. So you can see as we kind of touch down, we touch the bottom of the Bollinger Bands here, that would have been a very nice trade because we had this nice bullish engulfing candle right here where it's a red candle, a small red candle followed by a large green candle. So that would have been a very nice trade to do. Let's go long position here. So we could have done right there. Put our stop loss really short. That's the main thing. If you're going to be doing high leverage, make sure you have a very low stop loss. I recommend like even tighter of stop loss than this because you can get wrecked. That's the main thing. If you're using leverage, it can be a very nice tool, but at the same time you can get destroyed. For example, if you're just doing $100 but you're doing 100x leverage, you can trade with $10,000. So in this case, 2.5% of $100 is only $2.50. But at $10,000, you can do the math there. It just keeps ramping up. You have $2,500. So it's pretty interesting what the tools here are. And again, if you're using Fibonacci extensions, it can also help. But essentially, what you want to look for is a pattern like this. So this is a bearish pattern. It was breaking down in a bearish formation, but since this is technically a what pattern was this in this breakdown? Yeah, you could call this a descending wedge. So there's a pattern inside of a pattern. So this is fundamentally this is a bullish pattern since it's an ascending triangle. Or sorry, I mean it's a bearish pattern. It's an ascending triangle. But if we draw this out, this descending wedge, this is a bullish pattern. That's what I meant to say. So this is a bullish pattern. And we could get rejected right here since we were in this channel. So it's a descending channel, which is a bullish pattern, but the overall pattern is bearish. So if we would have, for example, touched here, broken down, and then you want to short it, well, it could just be a fake out. But if you had a confirmation of the breakdown out of this pattern, it would be essentially, it would look something like this. So we'd break down, people would short it, but then it'd bust back up, so people might get taken out of their position. And then if it was a confirmation, it would break down from here. So this is that spot. If you were going to short it here, you'd want to short it. So that's just an example of you kind of have to have these things in mind when you're trading and really take the emotion out of it and just have a plan, like have a logical plan and stick with it. So if again, so let's get back to this current pattern. So we're in this descending channel. We bounced up in this symmetrical or in this ascending triangle. And again, this would have been a decent little trade here. We'll see exactly what happens, but we can even zoom in on the 5-minute. And yeah, so we're really just in this nice little pattern here. It's looking like we could break back down a little bit short term, maybe touch this this middle area and then push up. But you can kind of see as these Bollinger Bands kind of consolidate together, this means that price is either going to break up or break down pretty quickly. And yeah, so those are pretty much the patterns that I use just for basic technical analysis. I do plan on doing a technical analysis video on Cardano and Polkadot, so let me know in the comments what other coins you want to see as far as technical analysis goes, or if you want to see other strategies. If you enjoyed this video, let me know in the comments. Like, subscribe, button all, invest global, and until next time.